Good morning, good afternoon, and good evening, everyone watching TechviCast podcast series section. My name is Vincent, the Chief Growth Officer coming from Techvify Corporation, an end-to-end AI-powered digital transformation company. So I will be your host today. So TechviCast podcast series section is the series of podcasts where we have a chance to discuss with the business owner, the tech leader, and the innovator in the tech industry to see how actually AI is transforming business across industries. So in this episode today, we would like to introduce to all of you a very special guest, Sachin. Sachin is currently the Chief Product and Chief Commercial Officer coming from a growing digital banking platform, 101 Digital. He has spent his lifelong experience working in the banking industry, moving from traditional bank in some of the very large banks like Standard Chartered to the fintech industry. And in his lifelong experience, he has experience with different duration of the growing in the banking industry. So he would like to share with us about the insight and how he sees the banking industry is transforming with the technology, especially with the AI nowadays. Welcome, Sachin. Thank you so much for spending time with us today.
Okay, so my career in banking is now, I think, close to 25 years.
Mm-hmm.
And to give you a sense of how much it has transformed, my first job was as an intern in a bank.
Mm-hmm.
There was no mobile banking, there was no internet banking, there was only branch banking at that time. Right? And I remember my job as an intern was to write the guidelines on if we have to do SMS banking. If you remember, earlier we used to have feature phones, no smartphones. So people could send an SMS to a banking number and they could get their account last 5 transactions or balances. So that was my first project with the bank. And come to think of it, in 25 years, the banking industry has completely transformed. We are talking about embedded finance and AI in banking now. So in a very short period of time, if you look at it, the industry has adopted a whole lot of technology and there's been tremendous transformation. So I think people have this perceived notion that banks are slow at adopting technology. In fact, from an insider's view, it's probably the other way around. Banks have to be on top of the cutting edge of technology to make sure that they are getting the best services to their customers and also protecting themselves and their customers from any kind of fraud or any kind of attacks, right? So yeah.
So, like you just mentioned, there's a lot of innovations, transformation, and also changes happening in the banking industry over the years, right? So, over the past decade, I believe banking infrastructure has becoming increasingly fragmented, right? With multiple providers, embedded finance layers, APIs, and regulation regionally. So right now, AI is on top of that. So from your perspective as the banking innovators, right? So for that fragmentation, it is just the temporarily phase or it is the new normal right now for the industry? Sachin?
Yeah, so I think, again, a very good question. From an outside in view, you might feel that there is tremendous amount of fragmentation. There are too many different architectures which are available. Technology adoption in some banks is good, some banks is small. But from an insider's view, this is just evolution. And every time there is an industry evolution happening, you will see a whole lot of old technology, old business models, as well as new business models and new technologies kind of fighting for the right space, right? So from my perspective, it's really an evolution. Other than new technologies, we are seeing new business models in banking. For instance, embedded finance is becoming a really big channel of new acquisition for customers, engaging customers with new products, with new experiences, and new balances which are coming from the bank. This did not exist 5 or 6 years back. And with the new business models also come new technology to support those business models. So that's really what's happening. I don't think it's really fragmented, but it's more like an evolution to what the new business models of banking is going to be.
That's a very interesting viewpoint from you, Sachin. Like you mentioned, it's not a real fragmentation. However, I believe with multiple choices right now in solutions, in technologies, and in new business model coming in, right? The business in the banking industry and the decision maker, it's hard for them to choose what's gonna work for them the most because they need to take the time to study and to test out what's gonna work for them the most and fit with them in the long-term strategy of the development in the company. So working in the banking industry for very long with your experience consulting to different businesses, right? How could you advise to the business in selecting the right one for them strategically in the long running?
Yeah, so look, banking institutions come in different shapes and sizes, right? So
Mm-hmm.
let me give you a few personas of banking institutions.
Mm-hmm.
Let's say you are a large incumbent bank. You're running 20, 30% of balances in the whole country. So you are, the top one or two banks in the country. It's very difficult for you to take up a wholesale transformation project and execute it without enough risks, right? So to them, I would say that the best strategy would be to build speedboats. Instead of trying to change your whole ship, you build a few speedboats like digital banks, like a banking as a service platform, where you adopt the new technology and where you serve a new set of customers with innovative new products. Now, once that starts scaling, then you have the confidence and the knowledge to start migrating some of your existing portfolios to these new technology stacks and new business models, right? So it would be, I wouldn't say, I wouldn't recommend a wholesale transformation, but I would say that try out several new concepts, several new innovations in a safe space where it's not really impacting the main bank, right? If you are, of course, a new entrant in banking, or if you're a fintech, or if you're a large conglomerate which is going for a digital banking license, then you have an opportunity to really think through what technologies do you want to bring in. Obviously, something like AI first banking is a new
Mm-hmm.
concept which is emerging. We work with a lot of new digital banks, and some of them have this grand vision of having really AI at the center of it. And I think that is the right way to think about it. You don't
Mm-hmm.
have any legacy technology. Have an opportunity to use the best. You can architect a future-looking stack instead of using something which is tried and tested in the past. There is obviously a balance that you need to strike in that, but that might be the best foot forward for you. So depending on who are you a large existing bank or are you a new bank coming up? I think the approaches have to be slightly, not slightly, I think quite different.
I believe the thing you just mentioned that is very highlighted and very key to the big companies or the big conglomerates, Sachin, because I totally agree that the big companies or the conglomerates, their legacy system very huge, right? And it's hard for them to change completely the entire at once, right from the beginning. So the right strategy or the right approach for them that is to do it separately. They need to like choose the right areas or the I mean easy use case to go with it first and then like proof for the new technology or the new innovation that can work and bring more efficiency or the return on investment to the company. And from that, after they see the return on investment clearly, they can have a plan to change at the entire company level.
Yeah, so I mean, not conglomerates, but larger banks, right?
Mm,
So banks, imagine you have a bank which is 100-year-old bank, right? Or
mm,
50 or 60-year-old bank. Now, think about it as if it's a building. Now, this
mm,
building is 50 years old. It's got 50 floors. People who have built the building are no more there with the bank. They have actually gone away. So
mm-hmm,
if you want to kind of renovate that building, you don't even know where the plumbing is and where the wiring is, right? So that's when you try to introduce too much change, you're also introducing too much risks because you don't want something to break down.
mm-hmm,
And in the banking scenario, a breakdown means direct impact to customers, their balances, and their trust. and the regulators are not going to be very happy about it, right? So that's a typical risk of transformation that large banks, existing banks need to manage. Now imagine instead of trying to break every floor and renovating it, why don't you buy a plot, an adjacent plot of land to where your
mm,
building is and start building a new building from scratch, right? You may not want to build 50 floors. You may want to build only 5 floors up front. But those 5 floors have the best, most technologically advanced building materials. You're using the best engineering teams. You're using the best technology available at that point of time to build that new building, right? That
mm,
kind of de-risks your technological innovation, right? Now, of
mm,
course, you can go back to the building and you can make some changes. You can definitely build in, some low risk technologies into the old building as well. But structurally, you wouldn't want to disturb it, right? So I think that's one way of understanding how do you want to approach it, right? So if you have an AI powered paint, for instance, yeah, that's easy. You just take the paint and you paint the building, right? It looks really nice.
mm,
Um, that's a risk you're ready to take. But if you want to change the structure of the old building, that's a high risk, right? So you better
mm.
start a new building rather than trying to renovate the old one.
So Sachin, like the strategy we just mentioned about the approach for the conglomerates or the big company to transform themselves, especially for the new technology or the area of innovation. So how do you see one digital think about its role right now in this approach nowadays?
So 101 Digital works with both large incumbent banks as well as fintechs and new digital banks, right? And we are a modern composable digital banking platform which can be used by incumbents to make small changes. And I'll give you a specific example. We worked with one large bank in Africa which wanted to build a partnership business model. They did
Mm-hmm.
not want to change their core stack, but they wanted to lay over an embedded finance capability so that they can start extending those APIs to various different partners in the market, whether it's fintech, whether it's e-commerce, whether it's ride-hailing companies, and start acquiring customers through these ecosystems. So in that case, we deployed our banking as a service suite on top of the existing stack, which
Mm,
came with sandboxes, API layers, partner management portals, and they could accelerate this whole partner ecosystem that they wanted to develop, right?
mm,
Um, on the other side, we work with a whole lot of digital banks where a new license is being given out and you want to go to market first or you want to go to market fast, right? Now, as a digital bank, you have a choice of putting together a team, looking at 20, 30 odd partners, creating an engineering roadmap which lasts for at least 12 to 18 months, launch after 18 months, refine your product, get the regulatory approvals, and start getting revenue, let's say in 20 to 24 months. Or you can come to 101 Digital, where we have a fully composed digital bank in a box and get to market in 6 months. So you're almost 18 months ahead of your competitors in time to market and time to revenue. So
mm.
that's how we work with incumbents as well as new digital banks coming up.
So, Sachin, from my research and from what you share, I do understand 101 Digital is like a modular service as a platform. Is that correct?
Yes, so it is. It's end-to-end digital bank in a box,
Mm,
right? And it's all composable microservices based. So
yes.
depending on your use case, you're right.
Mm,
You can choose the modules that you want to work with. So for
mm,
instance, if I'm a fintech, I have an e-money license. I have a digital wallet and I'm taking some deposits. But now I extend my license to digital lending. I don't want to build the entire digital bank, but I want only the modules which are related to lending. So
mm,
again, I can carve that out from the digital from the overall platform that we have, and give them only a lending origination solution, or a loan management solution, or a combination of both. Right.
mm,
So it's while it is a complete architecture for a digital bank, as you correctly said, it's completely modular
Mm-hmm.
and it fits into your specific use case. We can also
Mm.
deploy it pretty much either on any of the cloud service providers, or we can also deploy it like in some countries, you don't have cloud regulations in place. So in some countries, financial services still need to deploy on-prem, so we can deploy it on-prem as well.
All right. So Sachin, I think like one of the thing that blocks the changes or like the transformation from the big corporation is about like the legacy system, right? So I think it's gonna happen quite the same and similar to the banking industry. So I believe the real decision for the bank nowadays is whether to stay with a familiar legacy system or move forward with cloud native, compose composable platform built for the future. So in that broader transformation, right, where there's AI fit as an efficiency tool or a growth driver or an architecture reset. So from your perspective and your experience working with the bank, right, how do you see that is coming right now with AI?
Again, a great question. AI loves the new composable microservices architecture simply because there is way more access to data. All the events are logged, and the microservices are much easier to work with versus a monolithic architecture that legacy banks have been using so far, right? So
Mm-hmm.
as far as AI and modern architecture go, a modern architecture is very essential to get the best of your AI capabilities. And that's how all the new modern digital banks are thinking, right? So no digital bank is going for a monolithic architecture, right? Everybody is choosing composable microservices, API-led architectures, and then they are building in AI natively into that solution, right? Um, but that doesn't mean that legacy banks and legacy infrastructure cannot work with AI. There is tremendous amount of AI adoption happening even then. Now, remember, you don't have to change your entire architecture to adopt AI in your processes, right?
Mm-hmm.
But of course, if you have a decision to make or a new investment to make over a large new digital bank or a new business model, then you wouldn't want to use your legacy architecture, right? So
Mm.
I think there is space for AI in both. Of course, if it's a modern architecture, then it fits in very well. AI fits in very well, but legacy banks can also adopt it. That's how I think about it.
Mm. Okay. Thank you, Sachin. So if we look at the full fintech value chain from the customer acquisition on onboarding to underwriting, servicing, compliance, and collections, where is AI genuinely delivering the measurable value today from your perspective?
Um, the reality is that AI can deliver value across all of these processes.
Mm-hmm.
It's some AI has been present for a while now, even before ChatGPT and the LLMs came in. So, for instance, in customer onboarding, we in digital onboarding we have been using liveness checks and threat detection tools, which are all AI based. We've been using AI-based credit decisioning engines for a while, right? So I think in customer acquisition and onboarding, AI is very well embedded. But now we are seeing the use of AI increase in customer channels like servicing,
Mm-hmm.
as well as in the back-end operations, which customers don't see. But back-end teams are now efficiently using AI to, let's say, manage documents, manage their own processes, even manage the system and monitoring the systems of the bank, right? So I think AI is a force of technology and it cannot be ignored. And the more open banks and fintechs are to adopting it, the faster they will move and the more competitive they will become.
Mm. So with the thing you just share, I think with the legacy system, like you share, they don't need to change the legacy system, but like they also need to have the AI adoption into that as well. And like you mentioned, there's a different areas in the company that they can apply and adopt AI into that and real and to bring the real benefit into that as well. But I think like the biggest question is like the biggest question or the biggest challenge is like how they can, I mean, like integrate the legacy system into the new layer when they implement or adopt with AI. Because like I believe like from the company level, right? The strategy level, they would want to just like make the integration in the whole change in the entire company. So like how could they do that nowadays from your perspective?
Yeah, so look, if I'm the CIO of a large incumbent bank, right,
Mm-hmm.
the board would be asking me that, what are you doing about AI adoption,
Mm-hmm.
right? Every board is asking this question today, right? Um, from my perspective, AI is fundamentally a technology which drives more efficiency, it drives more productivity, it reduces my costs, and in some cases, it might even drive revenue. Right? So I will be looking for safe use cases within the bank where I can deploy AI tools, and I use the word safe because I don't want AI to mess up any of the customer processes, for instance. I don't want it. I don't want it to expose the bank to any new risks, right? So I will be, as the CIO of the bank, I will be looking for these specific use cases, right? And there are tremendous number of use cases where an incumbent bank can apply it, right? And I'll give you some examples. Um, let's talk about productivity of the developers of the technology team within the bank, right? There are several new projects that they are working on. How can they use AI tools, co-pilots to accelerate their own software development? Let's start from
Mm-hmm.
that, right? It's not customer facing. This is a software development lifecycle which will go through several different checks and testing. So we will make sure that AI, is really performing and there's no kind of risk or impact. So that's where I would want to kind of put it.
Mm-hmm.
I would want to put it in my operational processes. So today, if I am a bank RM and I'm onboarding a new corporate, for instance, or a new business, there is tremendous amount of documentation that I have to go through. I have to do several risk assessments. I have to prepare several reports for review. Now, AI can be a great help in parsing all the right information from different sources and creating documents for me, which I can then review and edit, thereby reducing a whole lot of time and effort on my end, and probably even human errors, because AI might be better at reading those documents in a short period of time than humans would be, right? So that's another use case. You are actually not exposing yourself in front of the customer or the regulators. You have internal processes and you're making them more efficient. So there are
Mm-hmm.
tremendous amount of use cases for incumbent banks and financial institutions to adopt AI into. Customer service is another one, which is now, I think there is confidence in AI. 10 years back, I remember in Singapore, there were some large incumbent banks who had introduced a chatbot, and the chatbot's performance was really bad because I remember somebody asked a chatbot, which is the worst bank in Singapore? And the chatbot just read the word bank and it assumed that they need to answer with this existing bank's name. So it basically said, my bank is the worst bank in Singapore. Right? So that was a very bad outcome. And people lost a lot of confidence in AI chatbots. But with the large language models, now that is also changing. Right. So
Mm-hmm.
we are now seeing adoption of AI even in customer service. And you may not again want to expose a chatbot directly to the customer, but you can give a chatbot to your servicing agent to be able to answer the queries that are coming over the phone or even on emails, right? So I think there are tens of processes that you can apply AI to in an incumbent bank. But again, the bigger challenge is that architecturally it is difficult to adopt it as a core of your services because you are just not, your tech architecture is not streaming events. It doesn't have a large data lake. So while you will be able to impact certain processes, the fundamental nature of your stack doesn't change, right? But that doesn't mean that they can't adopt it. There are several use cases which I just give you a few examples of where large institutions can adopt it.
Mm. That's very interesting, huh? Because I think like it is quite similar to us as well when we did the AI project for our client right now, especially in the BFSI industry. I think like it's no longer just solely the chatbot where to interact directly with the customer only, right? Because right now I think AI also can bring the real benefit into like the back end part as well, because like for some of the project right now, we did apply the concept AI driven software development for our client right now, which means we apply AI in every stage of software development to help our customer push for more efficiency
Yep.
into the entire software development process right now. And I mean, like in the just very near future, we don't see like a bunch of the people working in the project right now. It's gonna be like replaced by maybe I think just like a very small team with a different like AI coding agent.
Yeah.
So it's the real like it's the real thing happening right now where we see the AI evolution happening around. So you're very true about like the AI adoption area for the company right now, not just only a small part like we see very like long time ago with the chatbot, right? AI right now can like like go into every detail of the operation in the company right now. So just go back to just go back a little bit to 101 digital, Sachin. So like you mentioned, right? You have worked with banks launching the 6 to 9 months the composable platforms, right? This I think it is one of the strength thing for 101 digital as well, because normally if we see like any like transformation in the bank, it takes years to finish,
Yes.
right? However, like with your platform, I think that you can shorten that much and to real like just bring in the efficiency, which I think like right now most of the company they care about. It's about like how we can shorten the time and then like bring in the real efficiency, because like they don't want to spend so much time or money to test out the thing
Yes.
anymore, right? So with this, right? So Sachin, can you share with us more about like in that like in that approach, right? When you just like shorten the time like that, I think like how AI play the critical role with 101 digital right now. And when you're launching with that very short like timing like this, right? Is that AI like could be your accelerator tool, or like it is just like bringing more like like governance complexity to just launching like that?
Yeah. Again, that's a really good question because if I am a bank and I am introducing AI heavily into my architecture, then it also means that the regulatory approvals and regulatory scrutiny is going to be higher, right?
Mm-hmm.
So if I'm a new digital bank, I really need to balance how I use AI in my architecture versus going to market fast enough, right?
Mm-hmm.
Because all new digital banks will have very heavy regulatory scrutiny, right? So I need to strike a balance, and that's what I see most of our customers do right now, right? So I will answer this from two perspectives, right? One is the bank's perspective, and one is from 101 Digital's perspective. The bank, like I said, needs to strike a balance. So while it wants to focus on efficiency, on getting to market fast, really good customer experience, it needs to make sure that the regulators understand this tech strategy and they approve it within a certain period of time, and they don't take very long to kind of understand how the bank is doing. Um, Unfortunately, it's also a learning curve for regulators. Right? So
Mm.
just like cloud adoption, when AWS started several years back, I think more than 10, 12 years back, no financial regulator wanted to touch it because they just did not understand the technology. But now things
Mm.
are different. So AI is probably in the same stage as cloud adoption. Regulators are beginning to understand it, beginning to create policies around it. So the safer bet right now for digital banks is to have a right balance, not change the modern architecture that they want to use completely, but make sure that AI tooling is embedded for better customer experience, more efficiency, etc. Right? So that's the bank's approach. From
Mm.
our end, we are using AI pretty heavily on two fronts. One is the software development itself. So all our engineers are AI trained. We use several tools internally, of course, with the right controls to develop the software itself. The second tooling that we have created is something that our customers have asked for a very long time, is the ability to change and introduce new user journeys.
Mm.
So I'm a digital bank. I have launched with one type of account and one type of loan. Tomorrow I want to change the user journey, or I want to introduce more types of accounts or more types of loans. It should not become a large project in itself every time I want to do that. So we have an internal AI powered tool called Simpler, which is basically like you would say a lovable for financial services, an enterprise grade lovable for financial services, which we are now offering to all of our new digital banking clients, and they can use these tools to basically reduce the development time of a new user journey from 3 or 4 months to 3 or 4 days, right? So from a practicality perspective, they are able to react to market changes much faster. They are able to respond to what their customers are asking much faster, and they are obviously able to reduce the time and cost involved in developing new experiences for their customers, right? So these are the two areas where we are using AI incrementally for really significant benefits to the bank.
Thank you so much, Sachin. I believe your sharing just addressed my next question about the value of AI through the platform, like orchestration, monitoring, and configuration as well. So we are still talking about AI, especially when people think about AI, they think it's gonna be a growth engine, right? However, like from the commercial perspective, like your role as the chief commercial officer, what do you think about AI right now, Sachin? Is this like a cost efficiency tool, or it's gonna be like the revenue differentiator tool as well?
Yeah, so the cost efficiency examples are very evident, right? You mentioned yourselves and then some of your own projects at Techvify,
Mm-hmm.
you've been able to adopt AI, and the number of engineers required to deliver the same project with AI versus without AI is significantly different, right? So the
Mm-hmm.
cost benefit use case is there for everyone to see. I will answer the revenue generator from 101 Digital's perspective, right? I
Mm-hmm. Yep.
think as a company, we are a very lean company. We are very agile. We are very responsive. And one of the reasons for that is that we have started adopting a lot of tools which help us with these automations. So my job as a commercial leader for 101 Digital is also to look at tools which are available for, let's say, better sales growth, revenue generation, better outreach to our customers, better engagement with our customers, etc. Right? And I have started adopting a lot of these tools. For instance, now our entire social media is done by a marketing automation tool. Once you set it up, essentially it is running the entire social media, which could never happen. You needed to either have a dedicated agency, or you needed to have a set of in-house marketing people who are kind of managing your social media, right? Um, I'm also exploring tools around sales and outreach and other customer engagement, right? Which are AI driven and automated. So we reduce our dependency on agencies and marketing teams and deploy AI agents to do the same job. So this is very real. It's really happening. Uh, how much of a revenue uplift it brings in, it's still yet to be discovered. I would say it's very early stage,
Mm.
but the cost efficiency and the overall efficiencies is the experience is very good, right? Because even if
Mm.
you have an in-house marketing team, you might end up posting 2 or 3 times on LinkedIn, but if your AI machinery is running, you can post every day, and with pretty decently high quality posts, for instance, right?
Yes.
So
True.
we are adopting it. The revenue use case is yet to be seen. The cost efficiency is well established.
Yeah, I think from the commercial lens, I would say many AI projects are approved by the growth story right from the beginning. However, in reality, I think the first result usually coming from the AI is how much we can save for the cost in operation, like bringing the efficiency into the operation and the business as well, right? So I believe I also like have the chance to talk to different business owner in the company, and normally they would want AI to help them to push for more sales and help the marketing team to get more potential customer coming in as well. But I believe like the right thought about AI is how AI can benefit to different areas of the company, like how it can be balanced about like the revenue growth and also like bringing more the efficiency from the operation side as well. So when they invest into AI, they can have the right concept and the right investment plan into that as well. Because when I talk to some of the companies, they have collected 300 use cases of AI. However, like it's hard for them to choose what is the use case they're gonna do it first because they worry and they concern about the return on investment. So I mean, getting the balance on it and make it work and choose the easy use case like you mentioned right in the beginning. It could be the right thing to apply AI into the business and the operation of the company. All right, so now I'm coming up with a very interesting topic that you might hear about recently in Southeast Asia. It's about like the stealing money from the bank user with the high-end technology. So as AI increases the certification of fraud and risk profile of digital onboarding right now, how should the product and the platform leaders balance the innovation with regulatory confidence, especially for the newly licensed digital banks right now?
That's a great question. And as a technology service provider to banks, we've done a lot of research and work on this, right?
Mm-hmm.
Digital onboarding is a fundamental requirement for a digital bank. And now the fact is that the AI can look like you, they can talk like you, they can write like you. So how do we
Mm-hmm.
know that we are even dealing with a real person or it is somebody trying to defraud the system? Look, the good news is that the current technology and capability that we have, at least the stack that 101 Digital works with, is good enough to protect against this kind of a threat vector. Right? The important thing for banks is that they need to take a very close look at their existing digital banking processes, and they need to make sure that they're using a gold standard, right? Especially around digital onboarding. And let me share what I mean by this gold standard for digital onboarding, right? The first thing is that wherever there is a government registry available to identify or to authenticate the identity of the user, that should be used. So you should not depend only on the documents that the user is uploading, right? The second thing is that the liveness check, or what in technical terms is called the PAD, or presentation attack detection, that has to be very, very advanced and accurate. And current service providers are providing those kind of capabilities. So I would advise banks to make sure that they are using the most modern and the most well-established liveness checks that are available in the market, right?
Mm-hmm.
Third thing is document validation. Now there are countries which are issuing NFC-based passports or even identity cards. Wherever we can use those, again, banks should prioritize that, right? So you don't have you have direct authentication of the document physically through NFC, right? Um, and then, of course, you have to implement controls around, are you able to detect phishing attacks? Are you able to detect mules or consortiums which are trying to work together to break your digital onboarding processes, right? So I wouldn't I won't reveal what are the techniques to do that in this forum, but there are several controls that are embedded into the onboarding processes where we are able to kind of detect if somebody is, acting on a behalf of a consortium or impersonating, etc. So I think those controls have to stay in place and they need to keep on getting upgraded.
Mm,
So in short, yes, the gross risk of digital onboarding has increased, but the current tools and systems, if used correctly, are good enough to stop
mm,
the threat, right? And this kind
okay.
of also moves on to other processes where banks are facing threats, for example,
Mm.
transaction processing or approvals. So, the systems are in place. We just need to make sure that we are using them properly.
So, Sachin, as AI becomes more embedded in onboarding, underwriting, and fraud decision right now, so when something goes wrong, is this typically a model failure or a platform and governance failure from your point of view?
Look, I think when something goes wrong, it can be a combination of all of these three things,
Mm,
right? I can say that a platform like 101 Digital, which has now been deployed in multiple digital banks, and it is actively managed and actively enhanced. Platforms like ours, from a technology perspective, are fairly battle tested, secure, and constantly upgraded, right? So the
mm,
technology residual risk is very low. Of
mm,
course, a new digital bank, when it's going to market, it needs to have the right governance structure. The board needs to define it well. They need to have the right leadership to be able to implement it. So all those risks have to be managed through the board risk committee, and the right governance policies have to be in place, right? The good
mm,
news is that regulators are also on top of this, especially around digital banking. Most regulators have issued very clear guidelines of what to do, what not to do, what standards are acceptable, what are not. So as long as those are followed by the bank, I think they are in a safe space.
mm,
Finally, model risk. Look, nobody introduces a new model on a wholesale basis. So let's say I am introducing a new credit risk model. I will first go through a whole lot of testing process. I will expose it to a few customers. I will bring in a small portfolio. I will see how the model is performing over time, over the next 5 or 6 months, and then I will expose it to a larger population. So as long as again models are well tested, well observed, the model risk can be low. So ultimately, Vincent, it really becomes about individual banks' execution.
mm-hmm,
If they use the right frameworks, if they use the right established regulation, then they are safe. If they don't, then they can get exposed.
mm. Okay. I think like from our experience, Sachin, I think like failures are rarely just about like the algorithm itself. More often, I think it's about like the unclear roles among product risks and the tech, especially like AI decision affect customer directly. Because normally, I think like for the threat, right? For all the like stakeholder in the company, they should like define it first, and then I just see how they should cover for that, right? If is there anything missing about like the process to define that first, right? And then it's gonna happen. So even like if even AI really strong or AI really the technology is powerful, right? But like if we're missing any like the definition of the threat, right? And then it can happen during the process as well. So I'm going to my last question for the episode today. So Sachin, if you had to prioritize one of the transformation for the digital bank today, what would it be? I mean, putting in the comparison and the choice of investing into AI capabilities or investing into a composable cloud native platform, which gonna be creating the long-term competitive advantage for the company. And of course, any advice for the fintech company when they try to adopt AI?
So these two things are not competing; they're complementary.
Mm-hmm.
And if I have to make a technology choice, I need to have a modern composable architecture to be able to support my AI ambitions.
Mm,
So I think that's the order that I would adopt. Um, like I said earlier in the podcast, AI thrives on data,
Mm,
and monolithic architectures with fragmented databases are not good for implementing AI use cases, right? So first, I need to get my architecture right. Um, and then it's much easier to embed AI as a cognitive intelligence layer within that architecture once I have that in place, right? The good news is that most modern banks, modern digital banks, or at least the new ones, are going in for a composable microservices architecture. And that would significantly accelerate the adoption of AI with the modern digital banks. So I think we are all headed in the right direction.
mm. Okay. So, any advice anymore when adopting AI in the fintech industry? Besides like the thing like you have shared throughout the section today, like I mean like adopting AI into like the new area where we can easily bring in it. I mean accepting the impact of the legacy system, and like we can apply AI into like different area, not just like the customer facing and customer onboarding anymore. It can apply into
Sure.
like the operation, right? Besides
Yeah.
this thing, right? Is there any like other advices to the company when they try to adopt AI in the fintech industry?
Yeah, most of the times it's also about the culture and risk perception of the organization, right?
Mm,
Especially in financial services, the job of the management is to manage risks. And unfortunately, a lot of times new technologies as AI are perceived to be introducing new risks, right?
oh,
So,
okay.
but at the same time, ignoring something like AI, which is so fundamentally transformative, is going to make your company or any company which is being reluctant to adopt it less competitive, right?
Mm,
And within a few years' time, you will realize that your competition has gone way ahead of you, both in the back-end operations and the customer experience by adopting AI. So my quick advice would be to all the boards, all the CXOs and the CIOs who are still thinking about it, is to start with safe use cases,
mm.
build your confidence on AI, and then adopt it, across your organization. But just sitting on the fence or considering it as high risk is not a good strategy right now. You have to start these experiments. You have to start them now. You have to start adopting in a safe manner. Otherwise, you will be left behind.
And that was my last question already. I would like to thank you so much for your time and effort today in sharing the insight with us, Sachin. And for everyone watching the TechviCast podcast series section today, we'd like to thank you so much for watching. And we hope to receive your comment and feedback for the section today to let us make it better in the future. And we'll see you soon in the next episode. Thank you. Bye.